little bit of fun here. And so what we're going to do is I'm going to jump into the W-4 training, the Form W-4 training. And like I said, this is the first type of thing that you want to cover with your new prospect when they come into the business. Now, for many of you, you know that the W-4 has actually changed significantly in 2020. And so there's a lot of different changes. The IRS has tried to simplify the W-4. They've also gotten rid of allowances. And so there's a great deal of difference here with the W-4. And so while they still have the paper for the W-4, what we recommend, and even what the IRS recommends, is that you use the calculator that comes with the W-4. And so what we're going to do is we're going to jump into the W-4 calculator, or the tax withholding estimator, as it's technically called, and we're going to show you how this actually works. Now, one of the things that you're going to need when you get ready to do your W-4 is you're going to need a copy of your most recent pay stub. A copy of your most recent pay stub. And so I've got some demo pay stubs here that we're going to use for today's demonstration. So I will be referring to the pay stub that we have listed here. But now, before I get into the W-4 training, why is the W-4 so important? That's the question that you've got to ask yourself. The W-4 is so important because it's all about cash flow. Cash flow, cash flow, cash flow. If you have negative cash flow, it really hurts you. If you have positive cash flow, now you have the advantage to take advantage of some other things that we're going to be covering. And so what the W-4 does is it allows a lot of households to put more cash back into their household on a monthly basis. We've seen anywhere from $300 up to $500, $600 that come back into a person's household on a monthly basis. They don't have to go out and get a part-time job. They don't have to do anything but fill out their form correctly. You know, the IRS says that 80% of the people have this form filled out incorrectly. So there's 80% of the households in America who are overpaying the government, who could actually use that money for themselves. And that money can be used to eliminate debt, or to start investing, or even building your lifestyle. And so we're going to talk about those things, but I want you to know why we're doing the W-4 before we actually get into the W-4. We're going to take back the money from the IRS and then use that money, called income shifting, to either eliminate debt, start building our investments, or if you got to do a little lifestyle, you can do some lifestyle. So with that being said, let's jump into this W-4 training really quick. So we're going to go over to one of my favorite search engines, which is Google, and I'm just going to type in W-4 calculator, and we're going to run a search on the W-4 calculator. Now, we have this presentation in your back office, so the presentation is actually in a PowerPoint if you want to use that. I'm going to click here where it says Tax Withholding Estimator IRS. This is going to take us to the IRS, as you can see, and it's taking us to the calculator, the Tax Withholding Estimator. Now, the estimator just simply asks some questions about you as the individual. And so what we're going to do is we're going to set this up real quick. I've got a married couple, Mr. and Mrs. Johnson. So you might want to write this down, Mr. and Mrs. Johnson. And they have 3 children. The ages of the children are 2, 4, and 6. 2, 4, and 6. They pay $6,800 a year in daycare. The husband makes $40,000 a year, and the wife makes $60,000 a year. So we've got this family of 5 with $100,000 worth of total income, household income. They have 3 children, and they pay $6,800 a year in childcare. So let's go through this calculator really quick and fill this out. Now remember, you want your latest paycheck stub to be in front of you as you fill this out. So the first question asks us, what filing status will you use for your tax return? They're going to be using married filing jointly. And as we answer questions, we have new questions that will pop up in front of us. And the next question is, can someone else claim you as a dependent on your tax return? The answer is no. No one else can claim them as a dependent. The next question is, do you plan to claim dependents on your tax return? Well, they have 3 small children, so the answer is yes, they plan to claim dependents. How many dependents do you anticipate claiming on your tax return this year? 3. Income. Do you or will you or your spouse hold a job this year with paychecks from which federal income tax is regularly withheld? Yes, both of them have jobs. We got the latest paycheck stubs, so we're going to click yes. How many jobs do you expect to hold this year? Well, the husband expects to hold 1 job. How many jobs does your spouse expect to hold this year? The spouse expects to hold 1 job as well. Will you or your spouse receive income from a pension this year? Well, like most people in America, they're living paycheck to paycheck. They need all their money. And so, and they're not of age to receive a pension. So the answer is no, we're not going to receive a pension this year. And then the other says, check all that apply to you and your spouse. So other sources of income and tax payments. So they don't have any other sources of income that's coming in right now. The demographics ask them if they're 65 or older or if they're blind. They don't apply to, those demographics don't apply to them either. So they're going to leave all of these block boxes unchecked and they're going to click the next button. So here's what you need to understand. Filling out this form is just as simple as just answering the questions. Next, we're in step 2, which is the income and withholding. This is where the pay stub is going to come in very, very handy. And it tells you to enter your income and withholding for each job and or pension. So if you've got a pension, you'll need to enter that you earn income from this year. Each job should be entered separately. The order in which you enter them does not matter, and the estimator does not support decimals. So you want to round all the numbers to the nearest dollar value. So let's talk about the first job. Do you expect to hold this job the entire year? The husband says, yes, I expect to hold the job the entire year. All right, getting a little feedback there. Not sure why I'm getting feedback. All right, how frequently are you paid? This person is paid twice a month. So the husband is paid twice a month. On what date did you receive your most recent pay period? On what date did your most recent pay period end? So we'll go back and look at the pay stub that they have. And if we look at the husband's pay stub, the pay period ended that they got paid on the 1st of February. They got paid today. The pay period ended on 1/29/2020. So let's go and put that here on the form. Actually, we'll just do the first. They got paid today. All right. Enter the total wages you expect to receive this year. Well, we already know that the husband is going to earn $40,000 a year, so we enter $40,000. Enter any bonuses. They've got a good job, but they don't have a great job, so there won't be any bonuses that they're going to be receiving this year. So we'll leave those boxes blank. They haven't received any bonuses. They don't expect to receive any bonuses. Now, using your last pay statement, enter the total federal income taxes withheld year to date. So this is the total amount that you paid in taxes year to date. If we go and look at the pay stub, we can see that year to date under federal taxes, the husband has paid $316.89. So we're going to round that to $317. So we'll put in $317. And then it's going to ask you, how much have you had withheld from your last paycheck? So we'll go back to the paycheck stub again. We'll look at the last pay stub, which is under current. Currently, he paid $105.63. So we'll round that up to 106. Did you or will you contribute to a tax-deferred retirement plan such as a 401k? At this moment, they need all their money. Again, they're living paycheck to paycheck, so they're not currently participating in a 401k. So we're going to say no. And did you or will you contribute to an HSA, FSA, pre-tax child care credit account or other cafeteria plan? Now, somebody says, June, what does that mean? Well, here's the nice thing. There is a question mark beside each question. And if you click on that question mark, it's going to open up and it's going to explain that question in more detail. So any question that you have some questions about, then you can actually click on this particular button and it's going to provide you with more details around that particular question. So we are not participating in any type of cafeteria plan. So what we're going to do is we're going to leave this button as no. We don't participate in any cafeteria plan. Now, the next question is going to ask you about your spouse's job. There's a plus sign here, so we're going to click on that. And now it's going to ask us questions about the spouse. This is pretty simple. Just answer the questions. Does your spouse expect to hold this job all year? The answer is yes. How frequently is your spouse paid? She is also paid twice a month. On what date did your spouse most recent pay period end? We're going to enter February 1st here. Enter the total wages your spouse expects to receive this year. We know that she expects to receive $60,000, so we're going to enter $60,000 in this box. Enter any bonuses. Again, she has a good job, but not a great job. And so there's no bonuses that she has received or will expect to receive. So we'll leave that box blank. Using your last pay statement, enter the total federal income taxes withheld year to date. So let's go back to the pay stub and look at total taxes for the wife year to date. And if we look at year to date, she has already paid $616.89 in taxes. So that's $617. So we'll go ahead and enter $617. Then it's asking, what was the taxes that was withheld from your last check? Let's go back and look at the pay stub. The current taxes that was withheld from the last check was $205.63. So we'll round that up to 206 and put 206 in the box. So hopefully, as you can see, all we're doing is we're simply answering questions from our paycheck stub. Did your spouse contribute to a tax-deferred retirement plan, such as a 401k? The answer is no. Did your spouse contribute to an HSA, FSA, pre-tax child credit, or other cafeteria plan? Again, the answer is no. And then we click next. All right, so now we're going to jump into adjustments to income, and we're going to see what these adjustments to income is all about. It says most taxpayers don't have a large enough adjustment to have a significant impact on their tax obligation. Do you want to go to the next step without including adjustments to income, or would you like to see possible adjustments? Well, of course, we want to see what's possible. So we're going to click on See Adjustments. And when we look at these adjustments, student loan interest deduction, educator expense deductions, deductions for contributions to IRAs outside of your payroll, health savings accounts, moving expenses, alimony, penalty for early withdrawal, certain business credits for reservists, we have none of those. And if you have any questions on any of these, again, you can always click on the question box and it's going to open up and give you more detailed information about what that box actually means. So we're going to leave all of these blank. We're not going to take any adjustments to income. We're going to go ahead and click on next. Now we're going to look at deductions from income. It says that you qualify for a standard deduction of $24,800. Here's what that basically means. A standard deduction is what the government gives you for just being an income producer in the United States. And so if you're married, filing jointly, the first $24,800 is not taxed. And so they subtract that from your total income and start to get your taxable income. And so standard deductions has increased. It's doubled over the last couple of years. It has doubled. And so most people now do not have enough itemized items to overcome the $24,800. And in this case, this family is in the same situation. They do not have more than $24,800 in itemized deductions So they're going to take the standard deduction. Most people that you're going to be dealing with are going to take the standard deduction, especially now that the standard deduction has been doubled. So let's go ahead and click on next. Next is going to ask us about tax credits. And it's going to say, based on your inputs, you qualify for tax credits for your dependents. Tax credits are amounts you subtract directly from your tax obligation. Do you want to learn more or finish and get your results without tax credits? Well, of course we want our tax credits, right? We want our cake and eat it too. So we're going to click on See Tax Credits. And it's going to say child and dependent related. You stated that you have 3 dependents. If this is incorrect, please return to step 1 and update the number of dependents. Enter the number of qualifying children under 17. Well, I told you we had 2, 4, and 6. So we've got 3 children under 17. Child and dependent care tax credit. Select the number of qualifying persons. We've got 3 children. We're going to enter 3. Enter an estimate of your work-related child and dependent care expenses. What we're going to enter here is $6,800 because we paid $6,800 in child care. Earned income tax credit. They don't qualify for earned income tax credit, so we're not going to select an option here. But even if they did select an option, the calculator knows that they don't qualify for earned income tax credit, so no big deal. So adoption tax credit, they did not adopt, so we don't put anything here. And then the other tax credits that we have here are not applicable to this family. So we're going to just move on and go down to the bottom and click next. So now we get the results. And here's what it just says. Based on the information you entered, if you do not change your withholdings, you are likely to get a refund. So the expected tax withholding, this is what they're going to overpay the government, or they're going to pay the government if they don't change their W-4. They're going to pay the government over the next year $7,486 in taxes. However, they're only supposed to owe the government $1,432. That means that they're going to overpay by $6,054. Now, here's what I want you to do. $6,054, if we pull out our trusty calculator, take $60,054 and divide that by 12, that would mean that they overpaid by $504.50 each and every month. See, this is what we talk about when we talk about income shifting, because that $504 each month, that money could actually go towards either eliminating debt or investing. So that's $504.50 that they overpaid if they leave their form this way. So we don't want to overpay. So what we're going to do is we're going to scroll down, and there's this slider here, and the slider says if you want to get a big refund, just leave it as is. You don't have to do anything. But we know better now in my econ. So we want to not owe the government or overpay the government any money. So we slide this bad boy over to 0. And now a box pops open and it tells us what we need to do in order to change our form. And so for the husband, which he earns $40,000, it tells him to get your desired refund amount, you will need $3 withheld from each paycheck, 103 less than your current tax withholding. And so it has a little button here that says how to adjust your withholding, and it tells you what to fill out on the W-4. But here's what I like about what the IRS has done this year with the calculator. The IRS says you don't even have to do that. All you have to do is download the pre-filled Form W-4, and they've already filled the form out for you. So we download the pre-filled W-4, and when we download it and we open that W-4 up, all the information that we need is already on the W-4. All we have to do is put our name, address, our city, and our filing status. The information has already been filled out in block number 3, and then all we need to do is just sign and turn this in to our employer. It's just that simple. And so the IRS has made it extremely, extremely simple for you in order for you to fill out this Form W-4 very easily. Now, let's do this real quick. The wife has the same thing. She gets to adjust hers, and it's going to show her how to fill it out. Now, this couple heard about My Econ, and they decided that they wanted to get started in a home-based business. And so they got started in My Econ. And Mr. Tucker kind of talked a little bit about it briefly earlier, but you get a chance to write off some expenses that you normally don't get a chance to write off, like your cell phone, like your internet service, like some expenses on your car, your mileage on your vehicle. And so what they did is they said, we want to start a business. And when they started a business, typically what happens within the first 2 to 3 years of a new person starting a business, no matter what business it is, typically their expenses are higher than the income that they make. So we call that a paper loss, and that goes on the Schedule C, okay? And so what we're going to do is we're going to make an adjustment to their income. Now, what I want to do is I want to just stop here real quick. This number technically would go under income and withholding. So under income and withholding, it asks you the question about other jobs that you might have, okay? And because they are technically going to have other income that comes in, you would put that there. The problem with the estimator is that it doesn't allow you to do a negative number. So what we're going to do is we're going to say that they had $5,000 of adjustments in their business of a net Schedule C loss. And so we're going to go over here to adjustments, and you're going to also find that under adjustments, there's not a box for the Schedule C net loss. Now, for those of you that are very, very technical, you can go look at publication 505, and it will show you these net Schedule C. And so what the IRS has done is they try to make this form very, very simple. And there are about 20 to 21 different adjustments to income. Here on the form or on the calculator, they only show a handful. They don't show all of the adjustments to income. So what we do is we're going to take that $5,000 and put it in this box right here for certain business credits for reservists. We're not putting the $5,000 there to say that we're getting business credits for reservists. We're putting the $5,000 there as an adjustment to income because there is not a box here that says Schedule C adjustment to income. So we're going to put that $5,000 in the box, and we're going to go back and take a look at our results. And our results now show us that our tax obligation has been reduced to $832, right? Do you guys remember what it was before we put the $5,000 there? Let's go back and take a look at that real quick. If we take out the $5,000 and go back and look at the results, we would owe $1,400. But if we put the $5,000 by having a business, that $5,000 helps us reduce our tax liability down to $832. So this is why we say owning a home-based business is so vitally important, because that money would have gone to taxes. Now you can take that money and put it back into your pockets, and this is what we call income shifting. Finally, let's just say that the husband and wife decide, you know what, we have learned about investments and we want to start investing in our business, we want to start investing. And so what they're going to do is they're going to go back to their income and withholding. And there was a question that asked if they had participated in their 401k. They said no. But we're going to say yes. And we're going to just say that the husband and wife decide to put $3,000 into their 401k. So the husband puts $3,000 in his 401k. The wife comes down and she decides that she's going to invest in her 401k, and she puts $3,000 there. Because remember, they overpaid by over $6,000 in taxes. So by filling out the W-4 correctly, they'll get that $6,000 back. We're going to take that $6,000 and invest into their 401k. And let's take a look at what their tax obligation will be. So their tax obligation now is $112. $112. So if they put a little bit more in their 401k, they could actually get their tax obligation down to zero. Ladies and gentlemen, this is what we call income shifting. We're taking the money that we pay in taxes, we're putting that money back into our pockets, we're investing, and we're starting to eliminate that debt or eliminate the payment of our taxes. And we can eliminate debt or we can start investing. So you see what we did by putting that money into a 401k. The last thing I want to show you is what would happen if you decided to take that $504.50 and actually pay off some debt. So we're going to go to our MyEcon back office, and inside of our MyEcon back office, under your income shifting membership, you're going to find the debt elimination calculator. And in the debt elimination calculator, this calculator allows you to go ahead and enter some debt here. So what we're going to do is we're going to enter some debt. We're going to say that we don't have any acceleration money, and we're going to click Save and Calculate. And the way that the calculator works is it snowballs your debt. So we've got a mortgage, we've got student loans, we've got a car note, 2 car notes, MasterCard, credit cards. By using the debt elimination software, you're going to eliminate all of this debt in 10 years total, 10 years, 0 months. So you're going to eliminate $291,000 worth of debt in 10 years. And then at the end of 10 years, you've got $32.52 in monthly cash flow that's now available to you that used to service debt. Now, let's take a look at what happens if we take that $500 that we saved ourselves in taxes. If we take that $504.50 and apply it to our debt, let's take a look at what happens now. We eliminate our debt in a total of 8 years and 3 months. And then at the end of 8 years and 3 months, we'll have $3,756.50 each month that is available to us. Now, most people have a 30-year mortgage. We're able to eliminate this debt in 8 years and 3 months. So what if we took this money that used to go to debt and we started investing that money? What if we invested that $37.56.50 into a good mutual fund? Let's take a look at what that's going to look like. Again, we'll go back to our MyEcon Business Management Center. We'll go to our tools, and let's just go to our financial calculator. And let's just say that we're making monthly investments of $3,756.50. And let's just say that we just got an interest rate of 9%. And we did this for 22 years, because we were able to pay off our debt in 8 years. We had a 30-year mortgage. We were able to minimize all of our debt, eliminate our debt in 8 years. That left us with another 22 years that we would have been paying on that mortgage. Let's calculate over 22 years, and let's just see what happens. Our money would grow to be worth $3,100,000. Now, here's something that you need to understand. At this point in the business, we have not recruited anyone in our business. We have not sold the first product in our business yet. But if we implement the income shifting membership and the strategies, we're able to generate a $3 million portfolio and be debt free. You see, this is the power behind MyEcon and our income shifting strategies. You can start paying down your debt, or you can start investing, or you can do a combination of both. But that is why you want to start off with the W-4, get some cash flow, take that cash flow and start minimizing your debt, start investing, and start creating $1 million asset. Everybody can do this. You see, everybody can't necessarily recruit 50 people a month personally, but everybody can implement the strategies and become a millionaire. So ladies and gentlemen, I hope you've enjoyed the W-4 training. We're going to jump back into the rest of our presentation today. Let me open